Did you hear about the insider trading arrests yesterday?
Yes. I read about it on CNBC's NetNet. One guy got arrested for telling somebody that the iPad was a reader without a camera.
No. He got arrested for divulging non-public information about a company with publicly traded securities.
Why is that illegal?
Are you stupid? That's insider trading.
Why is that illegal?
You really are stupid. Insider trading means you are trading on non-public information. It's cheating. Basically theft.
Who are you stealing from?
What are you talking about?
If insider trading is like theft, who are you stealing from?
You are stealing from the buyers of stocks, because insider trading by the buyers push up prices.
I guess that's true, but diversified investors are as likely to be sellers as buyers in insider trades, so it ends up breaking even. No one gets hurt.
You're still wrong. Sellers are hurt because they are induced to sell too low because they don't have the inside scoop.
If anything, sellers are helped by insiders willing to buy their shares at the price the sellers are demanding. If the insiders are the only buyers at that price, then the seller would have been forced to sell at a lower price or hold the stock he wanted to sell.
But fewer investors will buy individual stocks if they are worried about insider trading.
Well, maybe. But ordinary investors tend to lose out when they try to pick stocks. They are actually benefiting if they avoid stock picking in favor of broad diversification and index funds.
Think about the big picture. Less money will come into stock markets if people are worried about insider trading. Capital will become more expensive.
This probably isn't true. Insider trading leads to better pricing, which means that investors can be more confident in prices rather than less. Surprising quarterly results, for instance, will create less volatility in a market where insiders have been trading the stock.
But insider trading means that ordinary investors are disadvantaged when it comes to the pros.
You don't say. Professionals have a leg up on amateurs. Shocking. Look, this is the case regardless of insider trading regulations. People who are professionally dealing with stocks will always have a leg up on the investor who holds down a job and invests his money on the side.
Well, insider trading damages transparency and trust in the markets.
Much of the trust that ordinary investors place in the fairness and transparency of the markets is misplaced. What's more, whatever costs may come from increased fears and investor caution are likely to be made up for by increased market efficiency.
But when I read about an insider trade, I often think I would never have sold if I'd known what the other guy knew.
So what? This is a claim that you are entitled to all the information everyone else in the market has. But there's no justification for this claim. The market exists, in part, because different people have different kinds of information and different opinions about what that information means.
Insiders cheat outsiders when they trade on non-public information. It's basically fraud.
Insiders almost never induce outsiders to sell. In a liquid market for securities, sellers typically have no contact with buyers. This means that they are selling without regard to who is buying or what information the buyer might have. No one is lying to anyone else because no one is explaining why they are buying or selling a stock. It's not like selling a car with a broken chassis and telling the buyer you just decided to walk more often.
What about manipulation? Insider trading permits someone to talk down a stock while secretly buying it up in advance of good news.
This might be possible, but it is very hard to execute. In the first place, actual buying activity is more influential than rumors. More importantly, this is just stock manipulation, which is illegal regardless of whether it is done through insider trading.
You are an insane idiot. Insider trading is just wrong. Can't you see that?
I'm just trying to figure out who gets hurt by the insider trading. So far you can't provide one example of the harm from insider trading.
If it wasn't wrong, we wouldn't have laws against it.
Oh, sure we would. The Wall Street brokerage complex wants people to buy stocks. Insider trading laws are part of a mass marketing ploy to get regular people to invest their money in stocks, particularly individual stocks. They love insider trading laws.
I'm thinking about punching you in the throat.
Does this mean I win the argument?
No. It means you are about to get hurt by insider trading.